Just a few days ago, markets were betting on a mega 50 basis point cut in the cash rate by the RBA next week, and also expecting a rate below 3% before the end of the year, perhaps anticipating 5 RBA rate cuts with a decent chance of a 6th, which was reflective of the worrying second-order impacts of the Trump tariff playbook, weak economic growth in Australia, and anticipated higher unemployment. While Australia got off lightly with a 10% levy on all exports to the US, as a small open economy heavily geared to trade, is particularly exposed to the fallout from impediments to global activity. Of course, the RBA left the cash rate unchanged in April, just one day before the US president unleashed sweeping tariffs that sent financial markets into a tailspin, although, of course, they've since recovered. Since then, much has changed. The tariffs are morphing into a more benign scenario, with China in a 90-day window to negotiate, and suggestions of tariffs which, though higher than before April the 2nd, are less likely to kill economies. And today, we got the latest Australian employment data from the ABS. Superficially at least, employment soared in April, while the jobless rate held steady as more people sought work, highlighting the resilience of the labour market. Employment jumped by 89,000, almost 4 times the predicted gain, and that's the biggest increase since February 2024. The report caps a run of data which will likely reinforce the RBA's watchful stance on price pressures in the economy, with both inflation and wages coming in stronger than anticipated and the jobs market remaining relentlessly tight. That said, the RBA's preferred measure of core inflation did return to its 2 to 3% target for the first time in more than 3 years, according to data at the end of last month. So the question becomes, will the uncertainty surrounding Donald Trump's global trade agenda and cooling inflation in Australia be enough to get the central bank to act? The bond market still ascribes a 92% chance of some rate relief when the RBA meets on May the 20th, as against 95% before the report. If they do cut, it would be seen as an insurance rate cut, driven by uncertainty in the global economy from the US trade question. Another reason to cut next week is the ongoing impact that the RBA's tight policy settings is having on the economy. Governor Michelle Bullock has said policy was restrictive, and we know that mortgage households are gasping for some more rate relief. See my recent show. At very least, next week's RBA meeting will be live, but don't expect big cuts based on the latest data flow.